Hey everyone, welcome to The Explainer. We're diving straight into something today that is honestly a bit of a hidden engine in global finance. We all interact with money every single day, but there is this massive, complex layer operating right under our noses. It's this wild balancing act between incredible social utility and really intense regulatory scrutiny. So today, we're unpacking the world of money services businesses, or MSBs, and looking closely at the profound tension between expanding financial inclusion and fighting financial crime. So think about this for a second. How do you actually move value if you don't use a traditional bank? Seriously, think about it. If you couldn't just open a standard checking account, how would you send money to family overseas? How would you cash your paycheck or load funds onto a card just to go buy groceries? Well, millions of people answer that exact question every single day using tools like remittances, check cashers, or prepaid cards. And those everyday tools, they form the backbone of a completely different financial ecosystem. Here's our roadmap for today. We've got 5 quick chapters. Beyond the traditional bank, actions define the business, inclusion versus financial crime, the cross-border reality, and finally, managing the MSB ecosystem. Let's get right into it. Section 1. Beyond the traditional bank, the hidden plumbing. We all kind of just assume traditional banks run the whole show, right? But for millions of people, non-bank entities are literally a lifeline. So what exactly is a money services business? Under the U.S. Bank Secrecy Act, an MSB is a category of non-bank business that moves, converts, stores, or transmits value. It operates outside the conventional banking model, but providing these vital services brings massive commercial importance, right alongside some incredibly intense regulatory requirements. To put this into everyday perspective, we're talking about foreign exchange dealers, check cashers, and people who issue prepaid access or money orders. It's the money transmitter at your local corner store, or even the U.S. Postal Service in certain respects. Chances are you've used an MSB without even realizing it.
Chapter 2. Actions define the business. The aha moment.
Okay, here is the massive regulatory twist. The label on your office door, it doesn't actually matter. Back in 2011, FinCEN put out a clarification that explicitly stated, it is the activities performed that cause a person to be categorized as an MSB. It completely ignores whether you have an official license or employees, or even if you're operating for profit. Your actions are what legally define you. So the bottom line is this. If you act like an MSB, you fall straight into the regulatory perimeter. And this activity-based approach is a really big deal because it traps so many unsuspecting startups. Imagine you build a slick new app that simply moves value from user A to user B. Well, surprise, under the Bank Secrecy Act, you might have just stepped into the highly regulated shoes of a traditional money transmitter. Chapter 3. Inclusion versus financial crime, the double-edged sword. Now we hit the ultimate tension in modern finance. It's a classic double-edged sword. On one hand, MSBs offer incredible, legitimate utility. We're talking vital financial inclusion, access for the unbanked, and crucial remittance channels. But on the flip side, those exact same features, high transaction flows and rapid cash-based movement, create immense exposure to money laundering, fraud, sanctions evasion, and terrorist financing if the internal controls fail. Because of those incredibly high stakes, certain risk areas require super careful assessment. MSBs naturally sit very close to cash, remittance networks, and prepaid value. The Federal Financial Institutions Examination Council, the FFIEC, specifically flags prepaid access and cash-heavy operations as areas needing strict scrutiny. You really have to look under the hood at how the products are designed, the channels being used, and the specific agent relationships moving that value. So how does an MSB actually survive compliance? Well, they have some really heavy Bank Secrecy Act obligations. Step 1, complete your FinCEN registration. Step 2, maintain a truly robust AML program reasonably designed to prevent financial crime. Step 3, execute suspicious activity reporting. And Step 4, fulfill specific agent list and record-keeping duties. This whole checklist proves an MSB is a highly regulated financial institution, absolutely not just some casual payments app. Chapter 4. The cross-border reality, a borderless threat. As you know, finance is increasingly online, and that makes digital borders incredibly complicated for the U.S. regulatory net. Digital value movement can instantly pull foreign actors right into the U.S. MSB framework. FinCEN clarified that a person can qualify as a U.S. MSB based purely on their digital activities within the United States, completely regardless of where they are actually based. Let that sink in for a second. No conventional physical footprint is required to be regulated. A business could have literally zero physical branches, no agents, no offices in the US, and still be legally treated as an MSB under the Bank Secrecy Act. It's a totally borderless reality, representing a massive shift in how regulators have to track the complex flow of global value. Finally, Chapter 5. Managing the MSB ecosystem. Banking the unbanked. All right, so how do traditional banks actually interact with this wild borderless frontier? There's definitely a misconception out there that MSBs are inherently bad or strictly off limits for traditional banks. But in 2014, FinCEN made a really clear statement. Banking organizations absolutely can serve the MSB industry while still meeting their BSA obligations. MSBs provide legitimate, necessary services. They are simply a customer type that requires intensive monitoring. To do that safely, strong bank due diligence is absolutely non-negotiable. Traditional banks have to dig deep. They need to thoroughly understand the MSB's business model, their internal controls, exactly who their customer base is, their geographic footprint, and their specific transaction patterns. By analyzing those exact risk factors, banks can safely bring these vital, high-risk entities into the broader banking system, making sure the people who need financial access the most can still get it. Which brings us to a final, really provocative question. We know MSBs are a total lifeline for the unbanked, but they are also a prime target for financial criminals. So as digital value transfer absolutely explodes globally and physical borders become increasingly irrelevant, how do we balance this massive push for total financial inclusion with the absolute necessity of keeping dark money out of the system? It is a delicate, ongoing tightrope walk between innovation and regulation, and it's reshaping the future of money right now. Thanks so much for joining me on this explainer. Keep asking those tough questions, keep learning, and I'll catch you next time.